Good evening, everyone. Oh, hope everyone is doing well and has had an okay week, or excellent week, actually. Hope everyone's been killing it. Uh, just a little bit of quick, just draw a few lines on one of my charts, just a few little housekeeping things before we kind of get going. Sorry for the delay in the next upload of the teaching thing. I've got most of the material ready for it for the strategy portion of the videos, but I've been a little preoccupied. I had some family in town, had some other stuff going on. So didn't do too much over the last couple days as far as filming and then with CT and some other stuff. So been taking it, been a little bit slow on the content upload, but I do miss doing it, and I definitely need to get back to it. I want to first start off by talking just a little bit about the different market conditions that we have. And by the way, because I still haven't fixed my Streamlabs stuff since it keeps deleting everything that I do, I'm Gator. Hope you guys are doing well. It's my channel. Link in the description of this video to the Discord that we trade in and the T3 live room if you want to support my channel and you want to sign up there, where most of us do trade. If we're not as active in the Discord, sometimes we're active over there. It kind of goes both ways, but you can check that link out in the description below. Also, like, share, subscribe, all that kind of fun stuff, you know, if you like this kind of content and you want to see more of it. Always like the content, share it with other people. It does help out the channel, supports what we do. The YouTube algorithms kind of figure out, you know, they're like, oh, people like this, and then they recommend it, and the channel grows. So we're a little over 600 people now, so excited for that to continue to grow. I just got to upload a lot more stuff, which is going to get hard with the kids coming in. On a new phone. New laptop died, new fridge died, all in a few days. Oh, man. I'm sorry, Rebecca. That is not fun. When it rains, it pours. It's like everything happens at once. We do the same thing. It's like, yeah, you're prepping for something, everything's going fine, and then all of a sudden, it's like every single thing that can go wrong goes wrong all at once. I feel your pain. Glad you're able to hang out though. Thanks for coming out. Just drawing a few of these boxes to kind of prep for the morning. So, and then we're gonna talk a little bit. I'm not gonna do that one. Let's just jump to the every name that everybody trades. So overnight, notice that oh nice, this caught up. That's good. I think that's probably the only ones that I actually need. Netflix. Good job, Ari, if you're watching this one later on the Netflix short. He called this one short, and I think he is still in it. I think he's got a target of $55 or something like that, which is pretty sweet. Target, I think he's still in it. Lotto puts. That's something I've got to get better at, and something I'm actually going to talk about right now, and something that I'm working towards. And sorry for the slow start. I'm just trying to knock some of these out so I don't have to do them later. And if you guys want to know what I'm doing, this is just a Fab 4 box. Represents the last 45 minutes of the previous day, the 200 and the 21 EMA on the 2-minute time frame. There we go. So we're going to talk about the last couple days. We're going to talk about looking into where the market's at and how to say this. Every day this week has been different. Every single day. And so I'm looking to the side because my chart's over there. If I move my camera, now maybe I'll be kind of looking at you guys while I'm looking at the chart. There we go. Now I should be looking at the chart and you. So every single day this week was different. Every day opened up different. Every day kind of traded different as we went going. And you can almost have kind of like cognitive dissonance as a new trader or as somebody that's getting into this job and this gig. It can be very iffy. 1940. Hey, I'm glad your health checkups were good. It's the little things, right? you got to be thankful for, because there's always stuff that seems to go wrong. So I'm glad at least your health as well. A lot of stuff can always be replaced, but you only get one body, you know? So let's look at this. When was Monday? What day was Monday? Monday was the 17th. So Monday. Monday the 17th. There's our thing. So Monday, if I remember correctly, so we're just going to look at this name, but this works for every single name. And what we're going to talk about here works for every name. It does the same thing. Nothing always trades the exact same. Things behave differently. So Monday on Tesla, you have what I believe it was actually fairly difficult trading and choppy, but you have something opening up. So we have a gap up near the 2-minute 200. We're expand. The box is expanded, but it's not. We're not in an extreme expanded state, if you know what we look for here. So it is possible to get, a continuing and a push higher. So we had gapped down the previous week. We ended the week down. We gap up to the top of that Fab 4 box right at the 200. We cut through the 200 and we put in a few legs higher. We actually catch a bid and we just kind of go up and up and up, and we ride the 8 up. We put in a nice move, and it trades in a direction that is noticeable, and it pretty much behaves all day. Like you gap up, you're above the 200, the 21 eventually catches up, you bounce off of it, you continue to go higher. I think it was fairly grindy, but it's tradable. It's tradable in one direction. I'm going to move my face out of the way on this. So it's tradable, and it's directional, and it's at least easy to see the trend. Once 1 p.m. hits and we hit the daily pivot, we basically do nothing. We go flat. It's choppy. It's done. Most of us are done trading by here, but you're now in a zone of consolidation into the end of the day. Well, now we had something that happened the previous day, and which is what we were looking for. A lot of times when we have a gap up, what we're looking for is we want a little bit of a retracement, and then we want it to go. We didn't get that today, or on Monday. We just had a name that caught a bid and continued to go, and then consolidated in the afternoon. It consolidated nicely, let the 200 catch up to it. A lot of times that's what we want to see. Okay, we're going into the next day. Tuesday, what are we going to look for? All right, we gap up. We're now in an expanded state. Here's your 21. Here's your 200. You're in an expanded state, up near resistance. We talked about this one in a 50% retracement. We retrace all the way back, which is not what we did the day before, so we had something different. For if you're just sitting down looking at this, you have a gap up in the Monday that actually caught a bid and went. And then the next day you have a gap up and you're thinking, oh, wow, so yesterday we gapped up and we caught a bid. So what's going to happen today? We gap up and, oh, no, we don't catch a bid. Instead, we sell off. We retrace, more than 50%. You're going to retrace the whole move. But you initially retrace, and we called this one short. We took it short into R1. It was a trade I took that morning, because that was your 50% retracement, if you can see that line, and usually when that line's up. So you fib from the open to the close. You can even do from the open to the 200, but from the open to the close, it was right at R1, so that was my target. It was slightly below it, I think, was the actual. But, we hit that target in Tesla. We retrace and we go lower instead of ever catching a bid. So we never catch a bid. We just go straight down, and then we just consolidate for the rest of the day. No bouncing out, no going down. We just sit in this range, which is the same range that we kind of had Monday. So even if you caught this initially, sometimes you're expecting it to bounce. Sometimes you're expecting it to go in, but it doesn't. And then what happens Wednesday? Look at this. A full day of absolutely nothing. Now, I'm just using this name as an example, but you could look at Tesla. So we had a gap up and it caught a bid. Gap up, sell off back into obviously where the price should be and where everyone thinks it, is agreed upon price, and it just sits in this range, and they're just going up and down, and we're just playing a range. Wednesday comes and we're like, okay, we are flat, nice, we're compressed, we're eventually going to expand. Now there was earnings coming out, so we really didn't we didn't expect much in it going into earnings, and so it did almost absolutely nothing all day. We play a few breakouts early. I think I called a long or a short. We caught one or two plays in here. I thought it was decent today, Rebecca. I thought it was pretty decent trading today, to be honest. Um, we'll talk about it in just a second. It was pretty decent. I didn't do too much in Tesla. Some other names. There was definitely a trend, and then there was a reverse trend. So you have a day of consolidation. So you take a few losses here, and every other day we've had a big move down back into the zone. The previous day we had a move up. So we've had 2 days of tradable action. And then we're compressed at the open and think, man, something's going to happen. And it doesn't. And then it goes back up and it doesn't break out, and it doesn't break out, and it doesn't break out, and it doesn't break down. And you just sit in this range all day. And if all you did was sit here and try to catch breakouts and breakdowns in this, you probably tilted and lost your day or even your week. It is so easy to blow out when something is in a range like this. And it's important to identify early what type of day it is, because every single day is different. Every single day might trade differently. Now, over the course of trading, you're going to know what type of day it is and how it's going to trade, and when a move is happening and when a move is not happening. Now, today we kind of had the opposite. We gapped down. We had earnings. I generally don't play names when the earnings. I didn't play Tesla that much today. I actually did Amazon and a few other things. Meta. We talked about Meta pre-market. So you had a gap down. It retraced and then sold off with the market. I traded it a little bit in here, but to be honest with you, mostly I didn't. I think this trade I traded some. Yeah, this one. Once we bounced off the 21 and went in here, I think I scalped one of the inside bar breakouts and a few other ones. But for the most part, I didn't touch Tesla. I don't like playing earnings names very much because they kind of do their own thing. But it is what it is there. So this day was different. So if you've traded Tesla this week, every single day it has behaved differently for you. And if you come into it one day, let's say you traded it really well on Monday, and then it does the exact opposite of what it did. Instead of gapping up and going, it just pulls in. It can really mess with you. So it's important as you develop as a trader to identify what types of days are your strength, or even early, what type of day are we in? Is there a trend going? Is there something that is working? When you zoom out, what is happening and what is not happening? And Geronimo talks about this a lot, and it's one of the things that I think he's helped me with the most is overall price and tape reading. Looking at what is happening, how things are moving, where it's going. Okay, so if you looked at Tesla every other day, we had a move pretty early on. So if you were looking at Tesla on Wednesday, this is a 2-minute chart, we go to a 1-minute chart, it broke out, failed to go. So at this point, you've had failed breakout after failed breakout after failed breakout. The one time we get up into resistance, it just fails straight, and now we're back in here. That you should pretty much realize that you're playing in a range. And until you break that range of, like, you could even just put it here, until you break the range and bounce back off of it of like your first open and your first close, and then down here, you could actually put it all the way down here. But until you break it to the downside, you're just not going to trade that name unless your strength is playing ranges and just bouncing things off of the top and waiting for it to get all the way to the top of the range and then coming down. And there are some days like today when we had the triple Qs riding the 8 all the way down. This is on a 1 minute. So what I did today, once Geronimo called a short, I actually took a short position, and I wasn't on the mic that much because I was in and out of the room with the kids and stuff. But I would just watch, and I would wait for it to come into the 8, and every time we got into the 8 on the 1 minute or the 21, I would buy a 1 minute breakdown, and I would give myself 20 cents. So I would come in here, I would wait for it to go up into the 8, I would buy a 1 minute breakdown, and then I would give myself 20 cents to lose on the trade, not taking a lot of size in the contracts. And when I was up, depending on how the price was moving and stuff, I'd be up a couple 20, 30 cents, and then I would be done. And then I would just wait. And I would just sit there and I would just wait for it to come back up, and then you miss most of the next move or whatever. You wait for it to come back up into the 8. above the 8, take your breakdown, flat, you're still not out, you're up 20, 30, 40 cents, whatever it is, you get out. And I would usually take 10 cents early and then hold the rest for another 30 cents. So the goal is just to make, maybe 30 cents total on the trade, wait for it to come back up into the 8, 1 minute breakdown. And you would have a couple losses, but, you would do that. And so it just kind of identified a way to trade basically riding the 8 train down. You'd come back up into the 8, the 21, go break down. Depending on here, this is one of the ones you might get stopped out on. We're kind of consolidating, bear consolidation, starts breaking down, selling starts to accelerate. You might actually hit the 21 on the 2 minute here, so this would be a short. But you begin to identify, okay, what type of day are we in? Because we had this early run up, and this is like to Rebecca's question, what happened early? You had this early run up in the Qs where you accelerated early up, consolidated, so one leg, boom, acceleration, 2 legs acceleration, 3 legs. So you go up, as soon as you pull into the 8, you rip, you wedge out, hit the 21, rip, come back in, rip again, and then we consolidate, fail, break down, lose momentum. Geronimo called these short, and then take it down. And you see the exact same on the flip side. It's rare that we get days where there's actually good movement like this. Thankfully, I didn't look at Tesla too much, and I was trading Amazon early. So when Amazon started going, I just did this instead of the Qs. But if you know your strength and your weakness, then you may, or I should say should be able to be like, hey, I'm not good at doing this today. And I don't remember what day it was this week. If it was Wednesday, I know Wednesday because I had something to go do. We took the kids to the zoo. But I think Monday, because we gapped up and we just went. I don't think I did too much in Tesla because I'm like, the way it's trading right now, I know I'm not going to trade it well. I don't know if it was because it didn't do what I expected and I traded something else instead of Tesla. But it's like, I know I don't trade this particular day really well. Now, days like today, I trade a little bit better because, like in what happened in the pre-market when we were talking on our show and we went through it and we're like, with Andrew, the introduction, best show ever, the best introduction in the business. When we were talking through that, what we decided to do, or like what I was talking through my strategy, I'm looking for this, it actually hit and it actually worked. So when that happens, I trade a lot better. If I'm going in though, and I'm looking for something and that something's not happening or the exact opposite is happening, then I just don't trade it because I'm like, hey, I'm looking for something and it's not there. So my mind is in a different place. I need to be able to read the market, read what I'm seeing every day, have my strategies that I'm looking to trade hit, and actually follow through. If I'm not getting that follow through, I have been working on not forcing myself to just throw more money at it and more trades at it. Like, it's going to work. It's like, okay, it's not working. I need to zoom out. I need to see, hey, what am I missing? Am I missing something? Do I need to take something else into account? Do I need to wait for something to happen? And when I say wait for something to happen, I could just mean, okay, we're in a range-bound day. I'm going to wait till we actually break out of that range, or I'm going to short the top of the range. Are we trending on a moving average? Like today when we were selling off in the Qs, and if you were in the T3 room, Geronimo was talking about that. We can see that we're clearly bearish. We failed on the day. We're starting to set up like a straight up ugly day. Here we hit the 21. We just started going down. Obviously we're starting to look really bearish, and we're just riding the 8 down. That was your 21 setup. What's happening? Can I zoom out, or did I get sucked in too early and now am I down, whatever is a big number to you, and I'm down that amount of money and I'm like, oh my goodness, like I need to hit home runs. I need to make trades that make it back. Or am I in a good mindset to just be like, okay, what's happening in the market? What trades are happening? And somebody called it out today. Who was in the room calling out some really good shorts? No FOMO? Yeah, no FOMO. You called out Moderna and Netflix. So you were zoomed out. I assume you were looking at different names. You called out, no FOMO called it 1119 a short. So 1119 up here when it was toppy, you were like, Netflix looks like a short. And, you called Netflix short up here. I actually missed, and if you watch the pre-market shows, I was talking Meta, and I had this descending trend line, and I'm mad that I didn't actually play this better because I thought this was going to be the top for the day. And like I was even looking at this when I was in here, and I didn't short it like I should have. When the market rolled over, Geronimo was talking about it. You sit here, you fail to get above this, it hits this line, it fails. I was like, this is going to be the top of Meta today. Watch for it to pop in the 36, wherever this line's at, and then we should sell off. And exactly what we did. I did not play this very well. I took this short, I think, the second time we hit and failed, but I definitely could have played that better. I don't think I was zoomed out enough. I think I was looking at some different stuff. I was kind of in and out of the room a little bit. But there are always plays to be had if you can actually put yourself and get yourself in the right mindset to be viewing the market and seeing what is happening. And it's easy to Monday morning quarterback something and be like, oh, I could have done this, I could have done that. But you're not just Monday morning quarterbacking it. You're teaching yourself what you could see, what could have happened, what type of day it was, what did the market feel like, what was Geronimo saying, what was I saying, what were people in here looking for, is there some type of trend that was setting up, what did we do, how did we act, have we come into resistance, it's kind of clear there, but are we coming into resistance, okay, are we failing to break out, are we going lower, how can I position myself in this trade or in the type of market to have an advantage? And some days there's nothing wrong with saying, I just don't have an advantage today. I just don't look at it. I feel like I'm off. I'm not reading something right. I'm not seeing something right. What I'm seeing is not working. I need to take a step back. And even if I trade, I need to do one share, one contract. I need to try to see if I can just be successful. Maybe I don't even need to at all. I need to take the emotion out of it, and I just need to practice my technical analyst, my analytics. So I could be sitting here at whatever time it was, and I could just be looking at this chart and being like, okay, so what do I see here? What is happening? And I could go through what I think is happening, and I could say, okay, so we put one leg up, and I'm just using Meta as an example. That's probably the second one. You can say that's the first one, but I'm gonna do that. That's the pullback, the ignition, 1, 2. So that's 1 here, and then pullback 2, and then 3. Hit the 168 of the second leg. So right here, if you were looking at Meta, and we're gonna use this because I talked about this in the pre-market today. What I could have done, and I could have done better than what I did for sure. I could have said, hey, all right, so just technical analysts, like I'm looking at this, we put one leg up outside of the box, pulled in, went higher, 2 legs, 3 legs, pulled back in, failed to make a higher high. So the move's done as far as acceleration. You hit the 8, you failed to go higher. You hit the 21, you failed to go higher. Tried it again and failed to go higher. So we're putting in higher lows. So what is something that I could do? You could do something. You could do something like this. And remember, this is just of me looking at it. We know what's going to happen. So, but I'm just trying to talk through what you could do, what we could see. So, okay, we have something like this. What's the whole market doing? At this point, Geronimo was talking about, hey, I don't think the market's going to go any higher. I think we're done. I think we're going to be rolling over. This is happening. These are the possibilities. You have your descending trend line here that you're below. You could look at it and see like, okay, well, we're at the 21. We're at here. Is there a level I'm looking at to break? Maybe this. Maybe if I set this up, the bottom of this ascending line, and I look, you know what, if it gets, there's a lot of candles right in here, 3, 4, so I have the top of some of these, maybe I'll move it up here. You know what, if we come back to the top of 36.50, or you could take the top of these 4 candles, you could do anything in here, and you can say, you know what, if we break above this and fail, I'm going to short it. You could come up with something like that. You could say, hey, if we break down and we get below this line, I'm going to try a short, because now we're breaking down, we're selling what's happening, you know, we're below the 21. I'm going to wait for that, and if I get a trigger below the 21, I'm going to try it short. You could practice technical analyzing trades technically without putting money on the line to help yourself develop that skill. And then slowly, just like we do with our other strategies, slowly start working money into it. So if it's a day when you don't feel on, practice something, get good at something, practice drawing these lines and say, okay, this is what I'm seeing. This is what I'm seeing. This happened. You know, you can go back and do it on a different day too, and some days names trade better than others. But then you see what happened here, and obviously we're not going to, you know, blind this one, but then you could say, okay, you know, if you didn't take it short here, you have a bear flag into the 8, and then you come down into the 21, flag out again, or sorry, the 200, break the 200 on the 2-minute, back up, you know, and obviously we just do this all day. Plenty of sell setups here that you could have taken. I think every green takes red worked on this on the 2-minute once you flagged. Or if you would have had the correct stop, you could have got stopped out there. Can you see that? Yeah, you probably would have got stopped out there. But the setups were there, especially on larger time frames. Once you actually broke those ranges, maybe that's a way to kind of trade the name. It's like as you actually break that range. October 21st versus 22nd. In what name, Matt? 21st versus October. You talking 20? You talking year? Or are you talking like what are you talking? Last year, I don't even remember what I traded last year, to be honest with you. I would say, let's go back. Let's look at what happened last year. Yearly. Or yearly wouldn't be right. It would be monthly, because I'd want to look at what happened last month in October. Monthly. So let's look at the triple Qs and see what was happening last October. 21 October. 5, 6, 7, 8, 9, 10. 21, right? As opposed to 22. That's 10. I mean, we were going up. We were towards the top of the range. Oh, I guarantee you I traded Tesla. So the difference back then was everything was going up. You know, you were still in this. Like, I probably had a good October. You had September that pulled in. October put in lows off the 8, and then we just kind of continued to rally. And we were going up towards the top of everything in the Qs. So, you know, if I was going to go to Tesla, I think it's probably easier to adjust last, or this, it was probably easier to adjust last. Yeah, look at Tesla here. I mean, yeah, I probably had an amazing October last year. Because all I did was trade this in Tesla. Like, look at this. You have just in this, look at that massive move. So yeah, last month I just would have traded Tesla every day to the upside, because look at that. As opposed to this month, you know, it's kind of in the downside and we've been shorting it. But that's what I mean. You have to now, to survive in this market, there are 3 or 4 different kinds of days. And I think I might have said it on Wednesday on one of the shows, and I was looking at stuff and I was like, hey, you know, we consolidated yesterday. I expect to break out or break down. And then nothing came. I was like, okay, I'm done. Like, let's just leave it. Yeah, PI was key. A lot of stuff was key. It was very different. And then we didn't get it, and you just have a consolidation day, you know, in the name. And once you realize that's taking place, you're like, hey, we got a range day. I'm not going to keep trying to catch the breakouts. I'm going to go find other names and see what they're doing. And if everything is just doing this, I need to identify early that it's a range day. I mean, you can tell the difference in, I didn't trade Apple those days. You can tell a difference in like something that's doing this. You guys know what the tape looks like. Like everybody here who trades with us, you know what it feels like when things are working. You know the days that are moving in a way that you make money, and you know when days are not. It's like, oh, it didn't work. Oh, it didn't work. Okay, you're down 500, 600, 6,000, 2,000, whatever amount is like $50, whatever is something for you. You're going in and you don't need to risk everything on every day because every day is not created equal. If we look at the difference in Tesla playing, Monday morning quarterback from Monday's gap up, so you gap up to the top of a range. You're at the top of a range, you gap up through the 200, you're not off the 200, you're at it. You gap up, you go, obviously 21 catches up to you, and now you're starting to expand, but you gapped up, you're off the 21, but you're still near the 200, and then you start moving. The difference is here, when you gap up on Tuesday, you're away from all the moving averages, not into any of the moving averages, so we come back into them. This one, you're still in them, you're at the 200, so it reacts differently. Here, it reacts differently. Wednesday, we're flat. Very annoying. And we don't break out. And you might catch one or two moves early, and then you realize, oh, wait, it's going to trade differently. We're not breaking out. I need to set my expectations. If I'm losing, maybe I'm trading it like it was making a $10 move in the first hour as opposed to a $3 move all day. And it's a little bit more than $3, but a $3 move all day. And then today, if you play to the earnings, there were definitely some plays to be had here. I tried a couple of them, but, it was very different trading today. And I knew that, and I was like, hey, I'm not really that interested in trading Tesla because it was going to trade different than the market. So the Qs were doing their own thing. So you had names like triple Qs, you had Amazon, look what it's doing. You had Meta early, look what it's doing. So all these names are actually in a trend, and Tesla's doing its own thing. I want to look at the market and trade the whole market. You had NVIDIA. We had people calling out NVIDIA. Look at NVIDIA early. So I didn't care about Tesla today. I wanted to trade NVIDIA. I wanted to trade Amazon, and then later in the day, some Tesla because it was going to be different than the market, and I wanted to look at the market and trade whatever it was doing. So I traded these names early. And did fine in them because they were doing what I wanted. They were trading in a trend. We opened up in some of these names, like, I don't think it didn't matter. I think NVIDIA, Apple. Like a lot of these names were tradable and were in a clear trend with the market. And when you have that, it's easy to go. You can be like, hey, I see what's happening. Like this is very easy to see the movement in the Qs here and be like, oh yeah, a little bit of consolidation. We waited a little bit. We had consolidation. We broke out through the, through the box, through the day highs. We put in an inside bar. We went up, wedged into the 8, exploded up, back into the 8, exploded up, and then obviously died off, consolidated, and failed. But you have the moves that you can identify and see, so you want to trade them. Once you get an 8 that doesn't send you any higher, and then a 21 that doesn't send you any higher, and you take a small loss or not as much of a win, you're like, okay, hey, I'm going to take a step back. This isn't it. I trade really well when this is happening in these strategies, and right here I need to step back a little bit. I need to identify that something's changed. We're now not in the middle of a breakout. We've hit resistance. This is happening. I'm not going to scalp as much. I'm going to wait. I'm going to step away maybe from the market once things have changed. It's like, oh, we're in a breakout. We're in a consolidation. I'm going to go get a drink. I'm going to, take a walk. The market's changed a little bit. I'm going to come back and look at it in 30 minutes. Who cares if I miss a move, 15 minutes. And then I'm going to see where we're at. You go out for 15 minutes. Maybe you see this like a double top setting in. I just added that for the sake of whatever. But maybe you come back and you're in here and you see this like, oh, wow, fail. Oh, man, maybe if we come back up to this line, I'm going to short it again. Maybe if it breaks down before it gets there, I'm going to short it again. Let's wait and see what's happening. It's like, look at this. All right, we hammered out. We have a range. Let's see if we get back up here. If we don't, we start breaking down. Let's try to short something. And you can kind of develop that. And I think it's important to do it without money first, and then to force yourself to do it like small, like with just a little bit of money, because you're going to see the potential of a move and what it could be if you're right. But once you add the emotion part of money in there, you really have to train yourself to take profits and to do some of that stuff right. So I don't want to get into that too much, but every day is different. Every day needs to be identified with where you're at. That's why we started doing the pre-market show. That's why we started, like, at least for me, I kind of share where I'm at and what I'm looking at. And I say, hey, this is what I'm looking at. This is what I want. I'm identifying something that I like, something that I don't like. I'm like, hey, this is happening. I'm looking for this to happen. We're in a consolidated state. I would like us to break out and go higher in these names. This is where I think we're going to go first. This is where resistance is at. I'm telling a story in my head and to you guys, and then I'm sitting down, and when the market opens, I'm then acting on that based on how things are trading. And then come over the mic, it's like, this isn't really breaking down here. I'm looking for it to come into support to get a little bit of a bounce and a reversal. All right, we're wedging out. I'm looking to take it off the 8. Like, I'm looking for certain things to happen. When they're happening, I'm good. As soon as they stop happening, I immediately have to shift. If it's in the morning and I'm used to trading Tesla a certain way, or I think, or any name, but I think it should be doing something and it's not. Obviously, I'm wrong. It's not, because it's going to do what it wants to do. I have to identify it and I have to be right, and then I have to act on it. If I'm not right and I'm not acting on it appropriately, then the only thing that's going to happen is I'm going to lose money. I'm going to be the one that's wrong. The market doesn't care. It's going to do what it's going to do. Your job as a trader is to see it and to act on it, to see what's happening, to make the read, and then to take the play with proper risk management to make money, to identify that and to take it and to do it properly. If you are, and if any of those parts are out, if your technical analyst is off, you're going to probably lose. If your risk management is off and you're taking too much size to allow the trade to work, then that's going to lose. If your psychology is off because you were wrong on something earlier and you took too much aggression, too much size, you're down, you're red, you got stuff going on outside of trading that's messed with you. And so your psychology is off, you didn't sleep last night, whatever it is, you're not going to be able to do it. I'm not saying you're not going to be able to, but as a new trader, you probably won't. As a more experienced trader, you probably will to an extent. But especially as a new trader, it'll be much harder for you to. So it's important to develop those things and develop them every day. And if you're like, hey, this ain't it for me right now, something's off, I'm just going to practice technically to see if I can get my head right. And then if I'm calling some of these things out right, or if I'm seeing things right, maybe I'll start again. But I'm not going to risk capital when I'm wrong. If I'm down money, pick a number, 500, 2 grand, whatever, I'm not going to keep risking a ton of capital on me being wrong. I'm going to try to fix what I'm missing. So am I making the right call, but I'm getting shaken out because I'm taking too much size? Am I entering at the wrong place? Is something else off mentally with me? What's wrong? Why am I losing? I'm going to fix that. If it's a technical part, all right, I'm going to sit back. Oh, wait a minute. I kind of see what's happening now. Here's a strategy I can take. I'm going to give it a try. Oh, wait, no, you know what? I'm just mad because of something else. I'm missing trade. I'm getting in too late, and I'm getting shaken out, and then the trade goes, and I'm just mad, and now I'm down money, and I'm doing this, although my technical analysis is right, my mindset's not right for everything else. And you're going to start having sometimes these battles with yourself. But when you're clean-headed and you're sitting there and you're like, okay, well, like for instance, the other day, it's like, oh, we gapped up. We're coming in, like, we're just retracing. Hey, I'm just playing it. Or today, it's like, hey, we went up, we failed to break out. Geronimo called this beautifully. We're just going down. We're riding the 2-minute 8 down all the way down. The first time we hit the 21 and the 200, absolutely beautiful rising wedge short. Boom. We're back up into the 21 short. We're into the 21 short. We're into the 21. A little bit of wedge here, break down again. Like, you can start seeing that. And if the money factor is not getting in your face, and your psychology is clean, and your entries are good, and this stuff, you start adding that together. But when you get tunnel vision and you get sucked in to something, one of the things in your OODA loop that's messing up, that tunnel vision is really going to wreck you. And it's going to mess with your ability to execute your OODA loop properly. And you have to be able to zoom out and execute on all different facets of that, the technical analysis, the risk management, and the emotional part of it. in order to be successful, and you have to have all of that. But the first part, I think, is identifying what type of day it is early, identifying what you need to do to be successful in that type of day, what trades you trade the best in these types of days, and then putting that stuff together for a trade plan, if that's what you want to call it, to actually execute and make money consistently. And that's kind of what I wanted to kind of talk about tonight, because I've noticed this week, every single day traded differently. There were no days where it was like back to back, like, oh, the same stuff happens, like Tesla's going up or Tesla's going down, or it's this, because we're in a little bit of a pop and probably about to sell off or whatever. But because of that, you had an absolutely, crazy week in that way, really good moves, but everyone was different and every day was different, and it took a different mindset, I think, or a different strategy each day to be profitable. If you come in every day just thinking that every day is going to look like this, like, oh, we're just going to have this early trend and then it's going to, whatever. It's like, that's not going to happen. Some days you're going to have less. Some days you're going to get less expanded and less contracted. Some days you're just going to consolidate all day and do nothing. I mean, for literally how many hours were we stuck in this zone from, like, I guess you could say from as soon as we got in here, you were stuck in this zone from basically 10 o'clock on the 18th until today. You went sideways and you had a $6 range, but most of that was just, you just had a small $6 consolidation range, and most of that was in a $3 range. So, and then even before that, if it wasn't for the gap up and then coming right back into it, you had the same thing here. So really all week you were just in a range, and then we broke down. So into earnings. You can have days where it's just like that, and you have to be ready for them. If you're not ready, and if you think every day you're going to come in and you're going to get these moves that, play out perfectly and that you hit home runs on, you ain't going to last long. But if you come in with the right expectations and the right mindset going into the day of identifying what's going to happen, not I'm going to hit this and this is going to happen, but where are we at in the day? All right, this is where we're at. This is what I'm looking for. All right, this is happening. All right, my plays are working and they're going through. Hey, I'm getting stopped out every time. That's not good. Hey, I'm taking money early and then getting stopped out on the second half. All right, what's wrong? Are we just choppy? And you start kind of putting that together. Even if it's not going to help you every single day right away, it begins to help you because you begin to look at your trades as almost robotic's not the right word, but analytical, and this is what I need to happen. This is what I would like to happen. I'm off a little bit. Hey, today feels like last week when I lost a lot of money. I'm going to trade differently. It's like, oh, we didn't break out. You know what? Last week I didn't do good on this type of day, so I'm going to make sure I shift. And then I shift and I fix myself. Last point. We're going to look at where we're at tomorrow. I think we're probably going to be, I don't know, I know Snap missed, so Meta and Google are probably going to be gapped down. I assume a lot of things are. The market's going to get dragged down. I'll end the show with, I would love for some of these names to be slightly gapped up. If you look at them, we're kind of in a wide state for the last 45 minutes of the day. If Tesla was to open up at like 210, 208, I think that would be beautiful and perfect, because then we could just short it. Maybe Elon starts selling. Who knows? I'll definitely be watching for that at the open every single day. Meta is going to be gapped down to like 20 something bucks. It's probably going to open up around 26 to 24 area. I'm just guessing. I don't know. I thought about shorting it overnight, but I didn't. Should have. It's my mistake. I actually thought about shorting it up here. Imagine that. It's like a freaking amazing move. I've got to get better at doing some of those that I do, like some of these analyst plays. I think I just go too heavy sometimes. But if we gap down, we'll see where we're at in the morning. If we hopefully in some names are flat to like slightly green, that would be preferred for a continued sell off for me. More than likely, that's not what we're going to get, and we're going to end up with a gap down, and then we'll see where we're at. It's Fridays. Fridays have been hit or miss. I would say probably I've only had the last 4 weeks one Friday that's been good as far as the option movement and price action. So we'll just see. We'll see where we're at. We'll see where we open up. There's no telling, anything could happen overnight. You break down the cues, you know, we could start to fill this gap down to $64. I would not be surprised if we start making that move tomorrow, especially if we break lows. We break $67 and start pushing for 66 and 64. Not saying it happens tomorrow, but that's kind of what I'm looking for. I mean, look at this on the daily, you know, where we're at. We're just steadily going. There's your, you know, sell setup. I wouldn't be surprised to see new lows set in. But that's just an observation that who knows if it's there or not. We'll see where we're at below the weekly 200 and stuff. I would like to see us push a little bit lower to maybe year lows. And then from there, yeah, that would be nice if we would push down like 40, 47, and then have a bear market rally and just make a big move back to the daily 200. I would like to see a little bit more of a down move, but I don't know if it'll come. Who knows? All I care about is what I'm going to be trading in the next few minutes. Yeah, depends on what strategies you're doing and your size. So if I had to tell you, like if I was struggling with my entries, I would be probably doing, it depends on the name in the day, but if you're front running, your technical analyst, your has to be on. Your ability to read what strategy is setting up has to be on. And when I front run, my losing percentage is probably really high on front runs because I'm assuming what's going to happen. And if I'm on, it's good and I get paid more. If I'm wrong, sometimes I get paid less. But if I was looking for, Tesla wouldn't be the name I would be looking for today. We'll just use the triple Q. So I'm not really sure what your, yeah, I'll gladly. So the next show, I don't have time to do. I'm going on vacation this weekend with my kids. So, my family, and my kids are part of my family. So we're going to go apple picking. So I'll only be trading for about an hour tomorrow. But yes, next week I will do a show. I know we're going to do a show on the trading strategies for the Intro to Trading series that we're doing, teaching people how to trade like we trade. And then I will do one that's specifically dedicated just to entries. So that'll be one of the next shows. I look for a trend, and I'll say this before we stop the show. I look for a trend, so something like this, and if I was looking for the 2-minute buy, like, you know, I would look for the 8 to come in, and I would look for this tail to form on a candle. Once that tail kind of forms and we catch a bid back into or above the 8, often that's my buy on something like this, assuming we're going higher. You know, if I'm trading this candle in the Qs, this red candle closes, as soon as that next candle opens, and, you know, I might give it 5 seconds to see what it's doing, I'm often entering, and I'm assuming, like, I'm taking the trade here in the Qs, and this is a 2-minute chart, and I'm giving myself a stop to the 8. Like, I'm going to say, hey, I'm going to take enough size to let this go down to here, and I think it's going to break out, or it's going to tag the 8 and then go, so I'm going to take it with that. So I would, if I was hyper scalping, I would just enter, and I would give myself a little bit of room, whatever I think I need to, 10, 20 cents. And then, you know, I want to be green pretty instantly. Hard to do in the Qs, easier to do in other names. You know, something like this, this candle's red. I probably enter as soon as this next candle opens. We go up, we fail to break out. You know, you probably get stopped out on this, but I might take a quick 10 cents off and then get stopped out on the rest. 10 contracts or half of whatever it is. But I'm usually looking for confirmation of a continued. So once I have a 2-minute failed breakout, I'm waiting for the 2-minute 8 to hit, because a 2-minute green takes red should have taken me through day highs. It didn't. So I know in my head, what am I looking for? A 2-minute 8 or a 1-minute 21, which usually are pretty close to each other. So, you know, this is going, and it tags the 8 on this candle, cuts through. I wait for a wick to form. I wait for it to come back into the moving average. And I kind of do that same thing. Once we hit a moving average, if I was like, hey, I'm really struggling, I would see trends like this, and I would say wait for a moving average to test and a wick to form into that moving average. And you can even do the same thing on the 1 minute. Wait for your first, near test of the moving average on a breakout. So your consolidation, don't trade here. We broke out. All right, we're breaking out. We pull in and flag. I'm going to take you can take the breakout, the trigger itself. You just have to know to have a little bit of room. It's hard right now to hyper scalp the triggers. So I front run the triggers and I give myself a little bit of room with smaller size. If it's a name like Tesla that's really whippy, if it's a really whippy day, you have to kind of identify that stuff. And I'll talk about that in a future video that's just dedicated to that so we can get that. But if you're really struggling with entries, I would look for things like this. Hammers near moving averages, like big wicks into moving averages. And then you're back above it. Let's say you didn't take this candle. This next candle, opens up, pulls into the moving average and starts putting a wick off of it. I would buy it there. You have a candle, an inside candle on a 2 minute that opens up. As soon as this candle closes red, this next candle opens. Within a second or two, I'm going to get in it. And, you're either going to break down into the 8 or you're going to go up. So the two things that are going to happen. And if it starts breaking down, I might give it just a little bit, not much. I'm going to watch the tape. If I'm seeing a lot of green prints, as soon as this next green candle opens, we're in the middle of obviously a bullish setup, right? We're in a trend that's going higher. I have a 2 minute inside bar, 2 minute breakout. As soon as that next candle opens in the next 2 to 3 seconds, if I'm not seeing red on my tape, I see it start ticking higher, I'm just going to take that trade and boom, same thing over here. Red candle opens. It probably initially starts selling off. So you don't get in it right away because you open up, you watch, you probably get a little bit of red or a green then red. It goes all the way down. It starts ticking back up. You're putting in this wick. I start seeing that wick form. I might be like, hey, this is a low risk entry. If it just starts selling off, I'm just going to get out here. I'm just going to get out for a small loss. So I'm going to take it because we're still in a bullish trend. All right. The candle closes. Next one opens. You get your pop and you sell. So to kind of answer the question, I'm looking for things like that for timing my entry. I'll do some trade review shows soon. I've got my recordings, but just not enough time right now. But maybe I'll do some mid-afternoon trade review shows when I'm not trading to review stuff in the morning and review entries and what I was going through. But a lot of it is that if you're going to buy the trigger, which is not wrong, you just need to use risk management and understand like, hey, I'm buying a Mark 5. I'm buying a Mark 1. And to kind of answer your question, Caesar, it's like I'd have to know what strategy you're using and when you're buying to tell you're having a hard time like entering. Like, are you buying after it goes up and it's already like you're 30 cents past the entry and you're buying and then you're getting shaken out? Are you buying right before it goes through on every single candle? Are you using fibs and holding to a level and you're giving a trade room? Like, without knowing what you're doing, it's hard to give exact advice. If you message me in Discord, I can maybe answer it a little bit better. And on the next show I do that's not an intro to Mark 1s, yeah. So this is a 1 minute chart. Mark 1s, depends on what name you're at and stuff, and the days. I mean, to be honest, it's been difficult this week. Do you trade Tesla a lot? If you're trading Tesla, and also remember, Mark 1s are not every 1 minute breakout. So Mark 1, there's no Mark 1 here. This is a 1 minute chart. That's a one and done that failed. There's no Mark 1 because we never trigger. Okay, so we're just going to assume Tesla. There's no Mark 1 here because you're not above the first 1 minute. So let's see. Yeah, remember, so Monday, we're just going to talk about this week. This week was kind of choppy. Gap up, 1 minute. There's your first Mark 1. I don't know if this candle opened and went down, like no idea what it did. But, you buy that breakout. It just depends on what your target is and how much it's moving. Because look at that next candle. It comes back down into that level. So do you get shaken out? Do you get in late and like you're trying to get it here? Are you front running? I will talk about what I've been doing, and I'll do that on one of the next shows next week. because I mean, just looking at this can be very difficult. So I haven't been doing as many Mark 1s. They still work. It's just how much room are you willing to give something. And I often look for 2-minute and 1-minute almost portals going together to kind of take trades. So I use a 1-minute chart, like there's your Mark 1, but I'm using it to maybe get to target. So I'm taking maybe a little bit less size, and I'm in it. And then the initial pop, when I'm up 10, 20 cents, I'm out half. And then I use the rest to like, hey, I'm looking for S3 to hit. All right, it hit. I'm going to wait. You have a Mark 1, but it's very choppy here. So I think if you're doing it Monday, it would be hard. Looking at it on Tesla's been choppy this week. It's been a hard week to trade Tesla. Your first Mark 1 in Tesla happens here. Into day lows, chop around for a little bit and go lower. Difficult Mark 1 to take. There's no more Mark 1 after this. You'd have to have a know your limit. Enter the 20. All this is very difficult. I wouldn't say any of this would be easy here on this short. I just held it, to be honest. So I will do a show on entries next week. I know I have on one of the intro courses for trading. One of the shows is dedicated to just entries itself, and I'm going to talk through the different ideas. But yeah, understand your strategies, what you're looking for. You can always front run a little bit, but front running can be difficult. If I was having a hard time, I would say buy on or at the moving averages in a trend. So something like this in Tesla, when it's broken out and going up, I'd be looking to buy on the moving averages. And I would be using moving averages if I was having a really hard time as entries. Once you're in a trend, I would be using the 1 minute 8, 1 minute 21, 2 minute 8 and 21 as my entry points. Not necessarily like as soon as I see that wick off of a moving average, that would be what I would be looking for as an entry. If I was really trying to hammer it down and be like, hey, I'm going to limit my trades. I'm going to take base hits. I would take the high conviction Mark 1s when you're in a clear breakout and it's like, hey, this is an inside candle breakout and it's just like beautiful, like what we had there in the Qs, like something like this. Just when my face is in the way, I'm rambling a little bit, but something like this, just a beautiful 2-minute inside candle. You take that, but I would generally be just waiting. If I was having a hard time, it was choppy, and I just wanted some base hits, I'd trade the moving average. You're in, your flag up, you pull into it, wait for that wick, wait for it to come in there on the 2-minute, probably hit the 1 minute 21 around there too. It did. There's your 1 minute 21 wick, into a 2 minute 8. You see those two things line up at the same time. You see that wick form, buy the candle, stop down here below it. There's your move. Take as much of it as you want to. You could do a measured move. You could do whatever. You could just take the profit. There's another, this is a 1 minute, there's your inside 1 minute candle, beautiful. You accelerated off the 21, you're in a clear trend now, higher. Next candle opens up, inside candle, there's your Mark 1 that actually works. And then I'd wait for another moving average kind of to take. There's your next moving average breakout here. Hit it, little wick, didn't go lower. Next candle opens up, immediately start catching a bid. If it breaks down, you're fine. You wait for the 21. So kind of like that. I did a show on level 2. I'd have to look back. It's probably labeled. I did multiple shows actually on level 2, tape reading, and a lot of general stuff. Yeah, man. Hopefully it is somewhat helpful. I will do some trade review shows and I'll talk about it. If you watch my other trade review shows, some of them I specifically talk about entries and nothing has really changed. Even now, I often wait for moving averages and I'm looking for them to hit and for a wick to form. And I'm watching the tape to see what's happening when the next candle opens on an inside 2 minute candle. We drop a little bit and then instantly start catching a bid. I just jump in. Knowing that like, oh, we catch a bid, we're going through a 2 minute breakout, we're going through a 1 minute breakout. So part of that like predictive kind of predicting is what I do. And sometimes it works, and sometimes if you're wrong and your technical analyst part is wrong, you're not going to be right on the other stuff. So if you're really frustrated with yourself, if your technical part of the trading is not there, then if you're not seeing what's happening, or you're expecting to break out and it doesn't come, that's when some of that gets difficult, and then you really have to kind of settle back in and reevaluate where you're at and what's happening. But yeah, I'll talk about it a lot more on some other shows. But that's hopefully a little bit more helpful, but I'm glad to help. Elizabeth, same. All right, guys, I'm going to go. It's bedtime. I'll be on tomorrow morning. Yeah, I'll look. Let me know. If you know which one it is and it's not labeled correctly, I will do it. I did it, and then I did several shows with JR right around it, and they were all around the topic of tape reading and level 2 reading. And I feel like I'm looking through some of my videos now just to see if I see it. I'm not immediately sure. I should have named it something easier to find. So Trader View, Trading Tesla, how I use level 2 to make money. That one is one you can check out. That one definitely has it. So check that one out. That's the name of the show, Trader View Show, Trading Tesla, how I use level 2 to make money. There's some other ones prior to that, and I did a group of shows with JR that are all about price action, and all that stuff is still valid. So you can check out some of my shows with him. Thanks. So do I. I hope the boys let us sleep tonight. We'll see. All right, guys. Love you guys. Have a great evening. Relax, sleep, get some rest. Be ready to come in tomorrow. Fridays, take it easy on Friday. Go into the weekend toxicity free and all that kind of fun stuff. But until later, like, share, subscribe, share this stuff with your friends. Tell them to sign up. They want to learn to trade. I'm obviously in the middle of doing a bunch of videos right now and working on scripts for future videos to kind of teach what I do and how I do it. So as many people as want to try to do this can do it. Appreciate you guys, everything you do. Appreciate you spending the night with me. I'll see you all tomorrow morning for our pre-market show and day trading.